Welcome. Today we dive deep into Iraq's currency, its economy, and what the future may hold. In 2025, the Iraqi dinar, long subject to speculation, sits at a crossroads. Is a revaluation, RV, imminent, or are the risks outweighing hopes? Join me as we unpack the facts, the myths, and the potential paths forward. To truly understand the dinar's prospects, we begin with Iraq's broader economic story. Iraq remains heavily reliant on oil, with crude exports accounting for over 90% of its foreign earnings. In recent years, the government launched the Iraq Development Fund, attracting over $7 billion in foreign direct investment as of early 2025, signaling a push to diversify beyond oil. In 2025, the nominal GDP is estimated at $315 billion. Economic growth is forecast to reach 4.1% this year, lifting expectations that Iraq may gradually reclaim stability. Still, structural challenges remain: corruption, political uncertainty, security threats, and heavy dependence on one commodity. These all play into how the currency behaves. Historically, the Iraqi dinar, IQD, has been tightly controlled by the Central Bank of Iraq. Its value against the US dollar doesn't freely float on global forex markets, which limits how much market forces alone can push it. So when investors talk about a revaluation, it's not just about market demand, it involves policy decisions, trust, and systemic reforms. As of late 2025, the official and market numbers tell a nuanced story. The USD or IQD rate is hovering around 1,310 dinars per a US dollar in international models. Trading economics. Meanwhile, local markets in Baghdad have seen rates near 1,478.5 IQD in some exchange shops. Iraqi news. In more moderate fluctuations, reports show the rate rising to 1,401.5 in key exchange hubs. Iraqi news. The International Monetary Fund, in its 2025 Article 4 consultation, projected the dinar's average exchange rate for 2025 and 2026 to remain at 1,300, essentially unchanged from 2024. Iraq Business News +1. That projection suggests that the IMF sees limited room for dramatic revaluation, at least in the near term. So this is where expectations and reality diverge. Many hopeful investors envision a sharp upward jump, a strong revaluation. But the current data and policy outlook suggest a more gradual, cautious path. There are multiple moving levers behind any shift in the IQD. Let's break down the biggest ones: oil revenue and global energy prices. Iraq's fiscal strength depends heavily on oil exports. A spike in global oil prices can boost revenues, strengthen reserves, and reduce fiscal pressure. But volatility in oil markets, geopolitics, OPEC plus quotas, introduces constant uncertainty. Political stability and governance reforms, anti-corruption measures, and credible institutions build confidence. Without them, even strong financial plans may falter. Foreign currency access and U.S. financial pressure. Iraq holds significant reserves, but access to those dollars can be constrained by U.S. regulations. In fact, 5 Iraqi banks were recently banned from transacting in U.S. dollars to curb money laundering, smuggling, and illicit flows. When foreign currency access is limited, the pressure shifts to the parallel markets, regional instability, and external shocks. For example, Israeli airstrikes on Iran in 2025 affected investor sentiment, leading to safe haven moves into the US dollar and placing downward pressure on the dinar. Monetary policy and banking reforms. The Central Bank of Iraq, CBI, plays a pivotal role. Its decisions on liquidity injections, currency issuance, and reserves management have direct consequences for inflation, currency stability, and confidence. Experts also highlight seasonal and structural volatility factors, such as timing of budgets, public holidays in key trading partner countries, or dollar sale interventions by the CBI. All these influences interact, so a sudden change in one factor, e.g. oil shock, can cascade into broader currency movement. Let's confront the big question: is a revaluation, RV, of the Iraqi dinar imminent? Many investors hope so, expecting leaps in value, life-changing gains, and rapid returns. But the reality is more layered. Myth. the dinar will suddenly jump 3x or 5x reality. No credible signal suggests such a leap is guaranteed. Many so-called gurus spread exaggerated claims that lack backing. In fact, Iraq Business News has flagged persistent false claims around revaluation. Iraq Business News. Myth. A revaluation is purely market-driven reality. Because the IQD doesn't freely float, any revaluation must be orchestrated through central bank policy, legislation, and external coordination. Myth. Holding a lot of IQD is a sure bet reality. It's speculative. The currency is illiquid in many jurisdictions, and moving it out of Iraq involves risks and costs. That said, modest upward adjustments are within possibility. Some analysts forecast mild strengthening toward 1,218-1,300 IQD USD by the end of 2025. Iraq Business News +3, Iraq Business News +3, EBC Financial Group +3. But while these gains may satisfy some, they won't match the sky-high expectations others hope for. Looking ahead, what paths can we imagine? Let me walk you through 3 plausible scenarios. Scenario A, gradual strengthening. Base case. The dinar edges upward slowly, perhaps toward 1,200-1,300 IQD per USD. As reforms take hold, oil revenues improve, and external pressures ease. The IMF's neutral forecast supports this scenario. Scenario B, stability. Sideways trade. The status quo holds. The dinar remains largely in its current range, with minor fluctuations but no dramatic shifts. This is likely if reforms stall or external shocks continue. Scenario C, depreciation, downside risk. If oil prices collapse, political instability spikes, or U.S. restrictions intensify, the dinar could weaken further, pushing inflation upward and eroding purchasing power. One factor that could tip the scales. In February 2025, Iraq banned 5 local banks from dealing in U.S. dollar transactions, a move tied to anti-money laundering measures and reducing dollar leakages. That contraction in dollar access imposes constraints on the system and could heighten volatility. Another structural shift. Iraq is building the Iraq-Europe Development Road, a vast infrastructure corridor connecting the Gulf to Europe. This corridor could boost trade, transit revenue, and non-oil income. If Iraq succeeds at economic diversification, expanding manufacturing, transit, tourism, the pressure for currency strength will grow. But success depends heavily on stability, foreign investment confidence, and execution. My view, over 2025 to 2026, the base case is more likely. Incremental gains, occasional dips, but no overnight transformation. So what do these dynamics mean for those holding Iraqi dinars, for local Iraqis, and for global watchers? For investors, holding large sums of IQD in hopes of a rapid revaluation is speculative and risky. You must factor in illiquidity, exchange constraints, time horizon, and currency risk. For Iraqis, currency stability affects prices, wages, inflation, and purchasing power. Sudden swings hurt households. For policymakers, they must balance liquidity, currency control, reforms, anti-corruption efforts, and geopolitical pressures. If you are considering a move in this space, be conservative in assumptions, diversify risk, and avoid sensational promises. In short, the narrative of imminent, massive revaluation is more hope than certitude. A modest, gradual path is more plausible, though still full of pitfalls. As of 2025, the Iraqi dinar remains a high volatility, high speculation story. The forces at play are powerful, but they do not guarantee a fairy tale outcome. Thanks for watching. If you found this valuable, hit subscribe, ring the bell, and I'll bring you more updates. Currency dynamics, emerging markets, and economic narratives that matter. See you next time.